Hello traders and welcome to another video review. Today is Monday, June 9th, 2025. Let's take a look what do we have in the economic calendar for today. Adjusted current account, the current account data together with the GDP and annualized GDP were the major data release during the Asian session. Mixed bag of data, GDP down from 0.6 to 0% in Japan, and annualized GDP even lower, 2.2% was the previous reading, minus 0.2 is the current reading. Chinese data release overnight are mixed as well. The biggest drop is in the exports from 8.1% to 4.8%, and in the imports minus 0.2 to minus 3.4%. The trade balance widens from 96 billion to 103 billion USD. During the London session, there isn't any important data release. We got some comments from ECB Elderson that will give a speech at 11 o'clock, and then we got the data from the US Atlanta Fed GDPNow scheduled for release at 7 p.m. and that's about it. So the Asian session were much more violent and busier than the incoming London and New York session. So without any further ado, let's just switch to the chart. We start with euro dollar. Euro dollar for our chart keeps moving higher in currently very nice, typical for the uptrend way. What I mean is, of course, it's bouncing up and down, up and down, up and down, and all of the lows are the higher lows, all of the highs are the higher highs. So it's some sort of the mini trend here that is right now being it's being of course used by the bulls to push the prices higher. Last week high 1.1495 still intact with this kind of a momentum that just bounced from the level of 44. Might be quite interesting right now. The momentum is positive, however it's not that strong, 54 points only, and this trend line is still being used as some kind of a vehicle, some kind of a tool for the bulls to continue to move higher. Please remember that in current situation, our scenario is very simple. We got the wave 3 high, then we got the decline in wave 4, and we should see some sort of the impulsive movement to the upside in order to develop the wave 5. However, please notice that this might be still a part of the wave 4, because it looks right now that the market is evolving into more complex and time-consuming correction, because this part of the price action is not impulsive enough, right? So let's just now stick with our scenario for now. However, please notice that we might still see some kind of a more complex and time-consuming correction in the future. British pound is on the same page with the euro dollar. However, we can say that we got new high at the level of 1.3615, which is higher than the wave 3 high, 1.3590, and there is 1, 2, 3, 4, 5 waves to the upside. So possibly, just possibly, this is the top for the wave 5, which is why now we should see some sort of the decline. Right, so the impulsive cycle has been completed. Now the corrective cycle must be done. We've been as low as the level of 45 on the RSI. We jumped to the level of 57 points, so it's not that bad. This internal technical resistance is not really being respected these days, 1.3559. So the market clearly sees the technical support instead at 1.3510. And this level is being tested, and it works. The market recognize it. We got another technical support, 1.3470, and this is the 2 pips below the 100 periods moving average on a 4-hour time frame chart is now located. So it will act as the technical support. The current scenario, if our 1, 2, 3, 4, 5 impulsive cycle is correct, the current scenario is the corrective cycle to the downside. So only a new high above the wave 5 swing high 1.3615 might invalidate this this current scenario, this point of view, ABC to the downside. All right, so please pay attention to this situation as well. US dollar versus the Japanese yen is locked inside of a very clearly defined trading range. From one hand, we got the 142.40, 141.99 demand zone. On the other hand, we got 148, 140, 868, 148.14 supply zone. And right now, the market keeps moving up and down as this situation here develops into more complex correction. So now look at this. We got the let me just change the color to black. There you go. We got the rejection of the trend line, of the black trend line. Okay, so we got this very nice movement to the downside back towards the 100 periods moving average at 143.98 after we almost hit the extremely overbought conditions. So we can see that we also the market is moving like an oscillator, but generally it runs into the extremely overbought conditions and it's being immediately sold when we get there. All right, so please pay attention to this situation. Obviously, the technical support still waits for the bulls. The demand zone still waits for the bulls. Only a sustained breakout below this zone might open the road towards the lower levels. Gold market on a 4-hour time frame chart is looking like it is consolidating the recent movement to the upside, recent gains from the recent movement to the upside. So we got the swing high and the technical resistance 3,500. Then obviously we got this level here, technical resistance 3,437. And if we multiply this line once more, we got the last week high located somewhere around 3,402, and it will act as the technical resistance as well. From the other hand, we got the technical support. Most likely that was this level here in the past, in the beginning of the April. Then we got another technical support located just below it, so 3,120, and since then we got clearly defined zone. Let me just make it a little bit thicker. There you go. So very thick red line is of course the high, and the other lines are technical resistance. I'm just wondering if there is any chance for the parallel channel here, but I don't think so. It doesn't actually look like the market wants to continue with this situation. Maybe something like this, but now we are out of the channel. Even if this is some sort of the nice channel here, now we are out of this channel. Maybe some kind of a test of the lower channel boundary and bounce from 100 periods moving average, which is located at 3,309, and then reversed lower might confirm this current observation. So please keep an eye on this situation. We got technical support 3,271, and we might have one more technical support at 3,230 and 45. So with that momentum here, which is negative 43 points only, we might see test and reversal. All right, so we got this market here that is always last in my review, which is of course the Bitcoin, and we have a very nicely functioning demand zone. Look at this movement to the downside, movement towards the demand zone, extremely oversold market conditions, and almost immediate bounce back towards the 100 periods moving average, back towards the level of 106,867, which is the technical resistance just below the trend line. So this is how it looks like on the Bitcoin. Very aggressive sell-off, Very nice opportunity for bulls to protect this demand zone, and as you can see, we are back above the 100,000 without any problems. Only a sustained breakout above the 100 periods moving average and the trend line would likely result in sustained movement to the upside and continuation of the up trend. All right, so please keep an eye on the technical resistance, 100 periods moving average, and the trend line. Any breakout higher with this kind of a momentum, which is positive but it's not strong, might get the bears into very tricky situation, and bulls might then do some kind of a maybe short squeeze straight on and attack the all-time high at 111,867. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.